Want to check in on some after-hours movers. Seagate moving higher. It raised its guidance, also initiated, or I should say reinitiated its dividend. 18 cents a share is a quarterly dividend. It had suspended it 2 years before. But we are seeing Western Dig also move higher in the after-hours session. Another mover, Tempur-Pedic. Dr. J, what are you seeing?
Well, boy, the earnings phenomenal. First quarter record sales and record earnings or bottom line numbers for Tempur-Pedic. Of course, those are really soft memory foam mattresses. The stock is surging $6 in the after hours, and it was not tipped off at all as far as the trade during the day because they were selling it primarily during the day. But it's a great move, strong enough to lift Select Comfort, SCSS, one of their competitors, by almost 5% as well. So very impressive quarter. They raised guidance as well, Melissa. Almost a 10% jump for EPS guidance for the next quarter.
All right. Thanks a lot for that, Dr.
Sure.
J. You know he thinks the dollar is going to dive. You know he's a Bernanke hater. You know he's no fan of U.S. stocks. But is there anything that Peter Schiff does like? We're about to find out how you can be a bear on the economy but a bull on certain sectors and countries. So, Peter, the question is, which countries do you like?
Yeah. Well, first, when I was talking about the segment, the idea was that you were going to ask me when I was going to throw in the towel. You know, when would the bears throw in the towel? And, you know, my point is there's no reason for the bears to throw in the towel. The bulls have got to throw in the towel because the bulls have been wrong for 11 years. You know, I was a bear on the U.S. economy in 2000. But what did I do? I didn't stay in cash because I'm a bear on cash. I bought gold, I bought silver, I bought gold and silver mining stocks. What did the bulls do 11 years ago? They bought the S&P 500 because they thought we had a great economy. Well, 11 years later, the Huey index was less than 50 in 2000. It's now at 600. It's up 1,200%. The S&P's gone nowhere. In fact, if you adjust it for inflation, it's gone down quite a bit.
Well, that's
so
assuming that you've held the S&P 500 for the past 11 years consecutively, which at least the people here on this desk have not.
But even if you traded it, did they trade their way to 1,200%? All you had to do is buy gold stocks 10 years ago and hold on to them. They're up 1,200% in that time span. The Dow would have to be at 120,000 right now to have kept pace. So the point is, when are the bulls going to realize that they've got it wrong, throw in the towel, and start buying some gold? Hey, buy some commodities. Get out of the dollar because you guys are losing money. You just haven't figured it out.
Peter, Joe, thanks for coming on. You know what? It's interesting. Given today's a day where oil is north of $110, I've really never heard you talk about this. What the heck's going on with oil? What's the trade there?
You've never heard me talk about it? I've been talking about it for years. Well, oil prices are going up for the same reason that all prices are going up, including stock prices. They're going up because we're creating inflation. Central banks are printing too much money, and that additional money is additional demand for oil.
So how high do you think oil is going to go?
It's going to keep going higher. It's not going to stop. Until we stop printing money, it's going to keep going up. And when we stop printing it, it's not going to fall. It'll level off because we have debased the dollar. You know, when the Fed first did this, when we went out the gold standard in 1971, oil was $3 a barrel. Right. And it was $30 a barrel by the end of the decade because of all the money we've printed. We're printing even more now. But if you really want to see what's happening to oil and our money, you know, back in 1960, you could buy a gallon of gasoline for 25 cents. That's all it cost. And of course, it was full service. They changed your oil and they checked your tire pressure. Well, if you have a quarter that was minted in 1965, today you can buy 2.5 gallons with it. So in terms of real money, silver, oil is actually falling in price. It's only in terms of the paper counterfeit stuff that the Fed is creating that it's going up. And all these stories about tensions in the Middle East or growth in emerging markets, it's all nonsense. Oil prices are going up because the Federal Reserve, because Congress is running big deficits, and the Fed is monetizing it, and we're suffering.
Peter, Brian Kelly, you famously said, and I think it was on this show, that you thought that gold and the Dow would trade at the same price. One, do you still stick by that? And would you initiate a short in the Dow, maybe the diamonds or something like that?
No, but I'm not short the Dow, because what if gold and the Dow trade at the same price at 20,000? So I'd rather be long gold. I don't know where they're going to meet. The reason I'm thinking 1-to-1, and it might not get that low. I mean, obviously the Dow would be very cheap, because if you look at the last century, the Dow and the gold were 1-to-1 twice, 1932 and 1980. And those represented extreme market lows. And I think we're going to have another situation where we have an extreme low because we're headed for a real economic crash in this country. And I think stocks are going to get dirt cheap, but not in terms of dollars, because I'm more bearish on the dollar than I am on stocks.
All right, Peter.
So, yeah.
Sorry. You had your piece, and so what's fair is fair. So I want to go back to the original question I asked you, and I want an answer this time, and that is, which stocks, which stock markets, which countries do you like since you don't like U.S. equities?
Well, I've got a lot of money in Australia. The Australian dollar hit a record high today. We have a lot of resource companies in Australia, in mining and in oil and gas. We've got a lot of money up in Scandinavia, in Norway in particular. We've got money in Switzerland. I have money just to the north of us in Canada. We have some money in South America. We're very big, overweighted the emerging markets. Lots of money in China, Singapore, Hong Kong. That's where the real economic growth is. And contrary to conventional wisdom, once the U.S. economy really collapses, the rest of the world is going to boom because they're the ones that are propping us up. They are subsidizing our economy. They're subsidizing American consumers. They are taking their savings and using it to prop up our economy instead of grow their own. Yeah.
Always good to speak with you. Thanks for your time.
Thank you.
Peter Schiff, Euro Pacific Capital. All right, so Peter's all in on this commodity trade because not only is he long gold, long silver, but he's along all of the countries that depend on those exports.
Right. I mean, it's certainly not a bad strategy. It's a strategy that's working. You know, when you look at China, and you mentioned Hong Kong there, I would just be careful of the housing bubble that you're looking at there. A lot of people in China have bought condos in Hong Kong. If that starts to unravel as the Chinese raise rates, that's going to be a problem.